Penny stocks, particularly those that trade below the $1 mark, are notorious for being risky bets, which could swing either way. Despite the uncertainty they hold, and a poor reputation amongst the more seasoned investors, they continue to be highly popular investment options. There are various reasons why one would choose to include penny stocks in their stock portfolios. For one, stocks that are trading so low could possibly be undervalued, especially in the case where they have fallen far from their peaks, down to below the $1 mark. Secondly, every high-value stock, be it Amazon or Google, started off with humble beginnings, at extremely low prices, before further growth was realized. Where there is the promise that a particular stock could achieve such a soaring appreciation over time, investors would rush to be of its earliest holders. In this video, we attempt to shine a spotlight on what we believe are some of the most promising penny stocks that currently trade below the $1 mark. Up first is the women's reproductive healthcare bio stock, Evofem Biosciences Incorporated, which trades under the ticker EVFM. The stock is one that holds significant promise, especially given that it caters to a substantial market and already has commercialized products that it profits off of. In fact, its on-demand birth control product, Phexxi, had just been approved for a 4-year shelf life extension by the US FDA. This seriously adds a boost to the market sustainability prospects of the company. Such prospects are a significant green flag that penny stockholders consider for investment. Moreover, the company is optimistic about its top-line Phase 3 results for its candidate, Evo 100, later this year. The treatment is a highly promising preventative drug that will ensure protection for women against chlamydia and gonorrhea. In order to gauge the growth potential of the stock in a more objective sense, one simply needs to look at the stock's current price against the target price that has been set for it by analysts on average. Trading at only 36 cents a share, analysts expect EVFM to rise up to a mean price of $22.10, which reflects a whopping growth rise of over 6,000%. A rise of such epic proportions is far from unrealistic, especially when considering that EVFM was trading at almost $20 just a year ago. This stock very much could be a goldmine for investors willing to undertake the risks and uncertainties associated with it. The second stock on our list is the stock for the Hong Kong-based digital marketing player, iClick Interactive Asia Group Limited. The stock, which trades on Nasdaq, under the ticker ICLK, is currently priced at less than 70 cents. Analysts have set a target price on the stock at an impressive $8.54, with its sales continuously rising in the last 5 years, without interruption. Given the sales the company delivers, its PS ratio of 0.23 is currently the lowest in the advertising industry, which hints at the serious undervaluation of the stock. E-commerce marketing in China remains at the forefront of the growth drivers, since the digital dynamic shifts that had come about since the outbreak of the COVID-19 pandemic. iClick Interactive's management had reported triple-digit enterprise growth in its recent most annual results, a trend which it expects to continue at least for the next 3 years. The price of ICLK had undergone somewhat of a plummet in the prior year, falling 96% from its peak of over $17 in February 2021. This in large part had been due to the declining quarterly EPS results, which continuously missed its analyst expectations, given the Chinese macroeconomic slowdown. These conditions, which had actualized in the latter half of 2021, had directly resulted in a contraction of the digital advertising sector in the Chinese market. However, the management remains highly optimistic as to the potential of the country's digital market. With the growth of services such as WeChat, Weibo, Red, and TikTok, analysts expect sustained growth into the future. In 2020 alone, McKinsey had reported a 30% e-commerce sales growth in 2020, reaching the $1.7 trillion figure. The current conditions understandably have led to panic amongst market participants, but have also led to a serious undervaluation of the stock, in light of the wider growth potential it holds. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Up next, we present fintech stock, the OLB Group, which trades under the ticker OLB. The company offers online, in-store, and mobile payments to small and mid-sized American merchants. Its most recent offerings include cryptocurrency payments and mining. In the company's recent first quarter earnings of 2022, it reported a revenue of nearly $9 million, out of which 97% reflects merchant sales, and 3% comes from crypto mining. This is promising, given that the lion's share of its revenue comes through the merchant segment, which is an organic growth area. Moreover, the company claims to be gaining up to 150 new merchants on average, which have a mean customer lifecycle period of about 7 years. These growth prospects do appear promising, which explains the target price of $10 set for the stock by analysts. According to this outlook, we can expect OLB shareholders to see their capital appreciate by 900%. We remain optimistic about OLB, because of the prime industry it is situated in, and its sustainable business model. This may very well turn out to be a heavy stock many years down the line, making the present opportunity ideal for hoarding on this penny stock. The fourth stock we put forward is Landos Biopharma Inc, which trades under the ticker LABP. This is a stock with immense promise, presently trading below 90 cents, but holding a mean target price of an impressive $20.46. This translates into potential gains that are close to the 2,200% growth mark, which is not a figure you want to simply brush aside. The company has a number of candidates in the pipeline, each of which address various specific autoimmune conditions amongst patients. At present, the company is not generating revenue, and is completely focused on seeing its various treatment candidates progress towards maturity and eventual commercialization. Each of these candidates remains in their early life cycle phases, with 2B trials for Amalancar expected to be announced later in 2022. Autoimmune disease is a growing area in research, with developments frequently being made. If a single candidate from the LABP portfolio is pushed onward in its development lifecycle, the stock could experience stellar gains. We believe that LABP is presently trading at a discount, and is dirt cheap, in comparison to where it is likely to be in a few years down the line. The final stock on our list, but certainly not the least, is that of the U.S. energy and telecommunications solutions provider, Orbital Energy Group Inc. The stock, which is more commonly referred to as OEG, is presently priced above 90 cents, and has seen quite the fall since last year. After hitting an almost 7-year peak of $9 in February 2021, the stock has persisted on a rapid bearish trajectory, losing 80% in the last year alone, owing to poor financial performance. 2022, however, promises to be a turning point for Orbital Energy Group, which many say is positioned to attain aggressive growth, given its strategic mergers and acquisitions undertaken in each of its core sectors. For instance, in the electric utility front, OEG acquired Frontline Power Construction LLC for over $200 million, whereas in the telecommunications domain, it had gone on to acquire Gibson Technical Services. Alternatively, the company has also been streamlining its structure by exiting non-value-adding agreements, as it had done for Orbital Gas Systems UK and North America subsidiaries. These strategic restructure initiatives have analysts bullish on OEG, with the stock's mean target price set at $9.25, which is far above its present price figure of 97 cents. These prospects make the stock simply too good to ignore for any sound investor. That's all from us in this video. We hope that the information presented has been insightful, and has managed to shed light on some highly promising penny stocks for your portfolio. We would love to hear your thoughts in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to visit our website, stockstelegraph.com.